Hi everyone, Darko here for your weekly trade example for the week ending Friday the 8th of July 2022. Before I start with my session, I want to just give you a heads up that we released a new podcast episode. It was an interview I did with one of my students for some year ago. So make sure that you listen to that podcast episode and to other episodes as well. And also make sure that you follow me on LinkedIn. I'm active on LinkedIn. Search for my name and I will be more than happy to have you on my connection list. Okay. I want to just let you know that the month of June was a losing month for me. The first losing month in 1 year and 6 months. So that happens. I would say anywhere between 1 to 4 losing months a year is completely normal. Okay, so like I said, this was the first losing month for entire 2021 and 22. So let's see what the remaining months of the year has to offer. Okay, let's see. I have a pending order in the market that I want to share with you, and I want to give you my thinking process behind that pending order, and we take it from there. Okay, we always start with the yearly chart. Okay, so the yearly chart is only for the bigger picture. Okay, the two previous candles are bullish. We are making higher lows, and my bias is up. Okay, so these are the levels of resistance that I'm watching for the yearly chart. We did not touch this level. We were fairly close to it, but not touch that level. So what I'm seeing here is a monthly retracement back to support for further upside and finish the job. We could be hitting this monthly level as a target. So that's one of the targets, obviously, or we hit this yearly level and we start showing some kind of weakness. Okay. So my bias is up on the yearly chart. When that's done, I go to my monthly chart and see, okay, price is retracing. Where could price could be retracing to for me to involve myself in a long opportunity? Well, this was resistance, became support, resistance, and we had some issues to break through that level. We broke to the upside and now we are retracing back into this level. Okay, so now I have identified the yearly chart is up. I went down to my monthly chart, marking support and resistance. That makes sense to me, what we call a significant neckline or significant level. Okay, now when I'm done with my monthly chart, okay, I'm going to my weekly chart and see how things are going on a weekly chart. Well, this level is also a weekly resistance. Okay, so now when I'm done with these three time frames, I go to my entry time frames, which is the daily and 4 hour, and see if anything makes sense to me. Okay, well, if I enter in here, okay, if I enter in here as a pending order, my stop loss needs to be, because this is the natural stop that I see on my daily chart. Well, this is, the stop is just way too wide. I need, nothing wrong with that, but you need to like trade super small lot size to make it, you know, the risk reward, or at least my risk on any given trade, which is 0.5% on my account. Well, I have a better option. Okay, I go to my 4 hour time frame. Okay, I go to my 4 hour time frame and see if I have any natural stop that makes sense to me, and we have. Okay, you see how this is also a strong level of resistance. I have a clear natural stop that makes sense to me. Okay, so this will be the stop loss. So if price comes down into this level, I will be entering this trade in here, okay, with some front running, and this is my stop loss. I will put my stop loss below that level, 25 pips below that level. So now this is my risk, and my reward makes now super sense. Even if we go up and make a double top, that's like, you know, way more than my risk. Okay, and obviously if we hit to the targets that I just showed you, well, that makes things even better. Okay, so this is basically what I'm doing for my paying service. Is I grab the mic twice a week, go through the charts, drilling this approach. We start with the yearly chart, work ourselves down to my entry time frame and see if we have a pending order. Okay, and there are times where there is no pending order, then I choose a couple of pairs and show you why we don't have a trade. Okay, it's important to know when to trade, but I will guarantee you it's way more important to know when to not to trade. Okay, because that's when you take these less those what I call less probability trades, and that's where you lose your money, and then you make it up when you see those valid trades, and those are the one that is actually paying for your losing trades. Okay, will this be a winning trade? Well, I have no idea. So the probability is what the market is doing is out of my control. What I do control is where to enter, where to put my stop loss, and where to put my target. That's what I can control. The rest of it is in the market's hands. Okay, with proper risk management, trade management, we have an edge that has been proven for the past 5 years, 6 years. Okay, that's it. So I hope that you enjoyed this short video, and make sure that you support our YouTube channel by hitting a thumbs up, and I will talk to you soon. Have a great weekend. Cheers.